Friday, January 30th, 2019, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about my favorite books about trading. One of them is Jesse Livermore, World's Greatest Stock Trader. The other one is The New Market Wizards, Conversations with America's Top Traders, that one. And the other one is a little more technical and more academic, not as entertaining, but very important nevertheless. It's Technical Analysis Explained by Martin Pring. And I want to talk about my experiences in trading as well, and that trading doesn't just have to be trading in the financial market. There's a really big world out there where you can find opportunities, in my opinion. And I'll give you some stories about myself, a little bit about my father as well, even though he wasn't a trader, like in the modern sense of the word, you know, trading in the markets. Before that, of course, I'm going to look at what the markets are doing this morning. I'm a little early today. It's just gone past 7 a.m. London. You might think, wow, why are you up that early watching the markets? Well, I used to get to the desk, to my desk in the city of London. I had to be there at 7 when most of the markets opened in the continent, and a lot of the futures market were trading already at that time. So let's see where we are this morning. Gold yesterday continued to trade quite well after I made my video, and it traded through 1310 this morning as well. We are up about just over $2 at 13.75, so a lot of 13s there. The high's been 13.15.76. Silver is outperforming this morning gold, which is a good thing. If you've listened to my videos before, in the precious metals bull market, silver should be outperforming gold. Right now, silver's at 15.93, up 10 cents, or 2/3%. The high's been 15.99, so now we know where the resistance is, right? 16. The Dow is up 12, 24,586. S&P is down 1 3/4 point at 2637. Sorry. Nasdaq 100 futures at 6660, up 29 points. I saw yesterday there's some news out about Apple, and actually the Dow future after the market close was up over like 150 points. So was the S&P, was up quite substantially. So all those gains have been given back. The Nasdaq has remained fairly positive though. The pound had dropped quite a bit late yesterday as well. Theresa May, well, what happened? Parliament, they voted against amending the exit deal. There's some amendments by Labour MPs to delay Brexit, and that was voted down. And I think that's why, you know, the pound came off quite a bit. We tested 130, but it held. Right now it's at 130.80, up 12 pips only. Euro dollar very stable, 114.30, unchanged. Dollar fairly stable against the Japanese yen. It's down 10 pips, 109.28. Dollar yuan. Dollars continue to drop against the yuan. It's at 673.60, down 0.2%. WTI crude, 53.39. So it looks like the range right now is like between 51 and 55. So it's not really, doesn't really have much direction right now, the price of oil. What about the bonds? Let's have a look. The 10-year yield has dropped a little bit from yesterday. Is at 272 now. The one-year T-bill yield is at 260.5. The 5-year is at 255. So that's even, you know, that's inverted further, which isn't a great sign. Today, of course, we've got the FOMC meeting, and there will be a press conference. I think there's a press conference now at every meeting, but they won't be doing their forecasts or economic projections at every meeting. So I don't think that they have that today. So that's at 2 p.m. They give their announcement, the statement, and then there's a press conference, I think half an hour later or so, I'm not too sure, Jerome Powell. So this is new because last year is only every other meeting they had press conferences. So the thinking now is that if they have a press conference at every meeting, that they can change rates at every meeting. That's true, but the Fed can change rates even between meetings. If there's a crisis, they'll just change rates whenever they want. So that will be important for the market, even though you know how I feel about the central banking, that I think, I don't think 12 men or women or a group thereof are smart enough to know where, interest rates should be. But there you go. The markets watch it. Trading. So I'll get to the books in a minute, but first I'll give you three things, or maybe more, that I think are really important if you're thinking about trading. And I'm doing this video, of course, because some people have asked me, they want to know more about trading. And I'm not giving trading advice here in my videos. I only talk about the markets and what I think, about the technicals, the fundamentals, but it's up to you to decide what to do. And that's the first rule for me of trading. You need to be your own man or woman, so to speak, a lone wolf. It's your business, no one else's. And I think if you are going to trade, you should just keep it to yourself. Don't talk to anyone about it. Oh, I've got this position. What do you think? No, just, you don't want any outside. It's got to be you, no one else. It's just like, I'll use the analogy of golf. When you're playing golf, it's just you against the course. So trading is just you against the market. And that's actually from one of the big advices from Jesse Livermore in this book. He was considered the lone wolf of Wall Street. He was very reclusive, never talked to anyone. His trading office, he never allowed anyone in it except for his the clerks that he used. And that was about it. So that's the first rule there. Be your own person, and don't talk to anyone about your positions or anything. Don't brag, because, just don't brag about anything. Don't talk about how much you lost. Keep it to yourself. That doesn't mean to say that you don't read about things and you don't listen to what people are doing, but keep it to yourself. Because it will, if you talk to other people, it could change your discipline, your way of thinking, and you don't want that. So this book here is very interesting. I mean, there's an older book called Reminiscences of a Stock Operator by, I think, Lefebvre. Forgot his first name. And that's about Jesse Livermore. It doesn't use the name Jesse Livermore. But this one is better, in my opinion, because it talks about his life. It's very colorful, his family. And the other reason I recommend this book is because it shows how difficult trading can be. And even for the greatest, world's greatest stock trader, and I think he was. And it starts, from when he was a kid, how he started out. Very interesting. And it's by Richard Smitten, so I highly recommend that one. So that's the first rule, in my opinion. The second rule, and I think you find quite a bit about this even in Jesse's book, but this one, New Market Wizards, Conversations with America's top traders. It's by Jack Schwager. This one, he's got other books as well. I've read as well. For some reason, I don't have it anymore. I don't know what I did with it. He wrote originally Market Wizards. And then he came out with the new Market Wizards, and I see that he's got a new one called Hedge Fund Market Wizards. So he talks to all the different famous traders in this book. I mean, one of the things that the other second rule I would say is that you get from all these traders is managing your risk, having contingency plans, not risking everything, using stop losses. That's quite personal though, stop losses, what percentage, or using options instead of futures. And he talks to some great traders here, so I highly recommend it. One of my favorites is about the turtles. I think it was Richard Dennis is the trader who invented the turtle system. And he actually, turtle system is just a system where you buy or sell when the market breaks like a 20-day high or a 20-day low or a 50-day high and a 50-day low, and you just go with the momentum. And he actually put an ad in the 80s in the Wall Street Journal, and he actually employed people who had no experience in trading just to follow his system, and they did really well. So, but that's the second rule, I think, is know your risk, manage your capital, because the other thing I learned about trading is when you do a trade and you do really well, for example, you're always like reluctant to get out because you think, oh, there's never going to be such a great opportunity again. So you hold on to your position, then it turns, and then your profits are gone. But one thing I can say, and I've been victim to that. I think everyone has, honestly saying. But the thing about trading that is really interesting is that there will always be opportunities. So you need to be patient. You might have a good run for a few months, take your money, and then just you might not feel like trading for another year, and then something comes up. The other thing that I would say before I come to the third book is that you need to be on top of it. You need to have time to make it your business to trade. It can't be a part-time thing, especially if you're going to do day trading, which, watching the screen, most of the day, every day, and trying to get little moves. I personally don't recommend that, but it's, as I said, it's up to you to decide. The other one is Technical Analysis Explained by Martin Pring. Very technical book, but it helps you, gives you an idea what to look for and how to find, turning points to help you trade. And one thing I would say, because when I started looking at trading, when I was in Switzerland, when I was finishing university and I was starting to look at, I went to meet a broker who was a friend of my dad. And I thought at the time that one thing you needed to do was read the papers, right? Because the business section, because then you could, but no, whatever comes out in the paper is too late. So I wouldn't bother with it. I saw a headline this morning on investing.com saying gold rises to 8-month high on the back of problems with the US-China trade deal. Got nothing to do with that. If you're watching the market, it doesn't matter some of the news. Of course, you got to follow the fundamentals a little bit. So what about my experiences? I said that trading is not just financial markets. I remember back in the early 90s in Switzerland, there's a kind of a fad, collector's fad for Swatch watches. I'm sure most of you have heard of Swatches. They're the Swiss watches, usually made of plastic. They're quite, they have loads of different designs. They're not as expensive as the other Swiss watches. Yeah, but in the early 90s, late 80s, early 90s, there was a fad, and you know, swatches that you could buy for 100 francs at the store. Some people were trading them for 500 because they were some are rarer than others, and I kept an eye on that. You know, whenever a swatch came out of the new watch, sometimes you could see people queuing up outside really expensive jewelers in Geneva to try to get the limited edition. And one of them was the vegetable set. And I have to say, it was really ugly. Here it is. I think they're doing a swatch special set of vegetable. And I remember when that came out, it went really quickly. It was a limited edition again. I didn't like it at all, but I think they went for 300 francs if you could get them from the retailer. But then the market got crazy, and people were paying 2,000 for the set. And I remember going on vacation or holiday with a friend of mine. We drove in my little Lancia car. Really, it was a car that you had to like. It went a lot faster downhill than uphill. It wasn't, but it moved. Anyway, we drove down to Italy for holidays in the summer. When we were driving back over the mountains at the border, we stopped to put some gas or petrol in the car, and the petrol station had a little store when we went in there, and the guy running the petrol station was selling watches, and I started speaking to him. Oh, have you got the vegetable set? And he said, no, but I'm really looking to get that. I have a lot of interest. The Italians love a lot the swatches. And I said, how much would you sell that for? Would you pay for it? So, well, at least 2,000 francs. So I kept that in mind, got back to Geneva. I looked through the classified newspapers, and there was an advert. Someone wanted to sell a set for 2,000 francs. I didn't have 2,000 francs at the time saved. I was just started working, quite young. So I had to try to find 2,000 francs like that. So I could have asked my father, but what he said is, ask the banker that I use. And I knew the banker well. Sometimes we went out, you know, for lunch. Very small bank in Geneva, and I told him about this, and I said, if you let me borrow 2,000 francs, I'll pay you back in a few days. And he did, and I think that was a good lesson as well, because I had to do this, because this was, and I had to do it properly, because it was not my father's money, right? So I met this person who advertised to sell the set, and it was an older, not very old woman, but for me, she was probably my age now. I was in my early 20s. For me, she was old at the time, and I had the cash, and I met her, and she said, "Oh, I want 2,000 for it." Well, I said, "I've only got 1,500," and she said, "Fine, I'll take it." And then I called the guy in the shop at the border. It was about 3 hours away, or 2.5 hours, 3 hours from Geneva. And I said, "Oh, I've got a set of the vegetable watches." And I said, "You know, are you interested?" He said, "Yes." And I said, "I want 2,000 for it." And he said, "Fine." So there you go. That was 500 francs. Of course, I had to, 500 francs profit. I had to drive back there, 3 hours there and back, 6 hours. If you count for the cost of the fuel, I still did really well, and I paid the banker back. He didn't even charge me interest, which was nice, because I paid him back in 2 or 3 days after he lent me the money. So that was one of my best trades, but it has nothing to do with the financial markets or trading on screens, and so that's what I'm trying to say. Trading is just not just putting positions in with brokers, it's also looking for opportunities out there. And as for my father, he never traded. He didn't really trade, financial markets. He wasn't into that. But I remember in Brazil, when things were really bad economically, one time he bought like a sports car that I thought he'd never like. He bought it because someone needed the money and liquid. There wasn't much money around. That's the other thing. When things get bad economically, there will be a lot of opportunities. And if you have cash will be able to get you things on the cheap. And that's a good trade too. So you need to have an interest and keep an eye on things, like I did. When I stopped at the petrol station or gas station, and then keeping an eye on the papers. And nowadays, it's harder, I would say nowadays, because everything is there's eBay, but even on eBay and stuff, sometimes you can find opportunities. So there you go. Trading. Yeah, it's exciting, but you need to be careful. Be your own man or woman. Manage your capital, and be patient. Stop if you're going through a bad patch, and then come back later. If you enjoyed this video, make sure you hit the like button. If you didn't, hit the thumbs down. I don't care. Also, if you haven't subscribed yet, make sure you do. And you can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day. Take care. Bye.